Morning traders, welcome to today's pre-market explainer. Let's dive right into the macro drivers and setup for May 11th.
Looking at the board, futures are flashing red, trading about 0.2% below fair value.
So is this a genuine macro shift or just routine morning consolidation? Let's look at the geopolitics. Over the weekend, President Trump flat out rejected Iran's response to the peace proposal, calling it totally unacceptable. But despite that escalation, check out the surprisingly muted reaction over in the energy markets.
WTI crude barely flinched, bouncing just $2 and change to sit near $98 a barrel.
Compare that to last week's massive $10 plunge. Active traders just aren't pricing in genuine panic here.
This token reaction leads right into our next major catalyst, the upcoming Trump-Xi summit in Beijing.
The trader logic here: Washington won't disrupt global oil or spike U.S. gas prices right before that summit.
Look, the Strait of Hormuz blockade is absolutely real, but it's not dictating today's immediate price action.
The real setup is the broader market context. We're coming off some massive multi-week win streaks.
Strong corporate earnings and relentless AI momentum are basically just blinding out all that geopolitical noise.
Tech is absolutely leading the charge. The Nasdaq alone has surged over 21% since late March. Midcaps and the Dow are up solidly too. The underlying bullish trend here remains structurally very sound.
Now, mainstream headlines will probably blame today's slight downward bias on oil jumps and Middle East tensions.
But the practical reality is way simpler. Active traders are just taking logical profits after a huge run.
So, with the opening bell approaching, are you bracing for geopolitical fear or buying this logical technical breather?